Here's a summary of Freeport-McMoRan's FCX 2026 Q1 earnings call, designed for clear and concise delivery. Introduction and CEO's opening remarks. Good morning, everyone. Today, we're discussing Freeport-McMoRan's first quarter 2026 results. As we enter our 20th year since the combination that formed today's Freeport, our strategic focus on copper, solidified when I became CEO in 2003, has proven to be an excellent decision. The global copper market is entering a new era of growth, driven by the increasing demand for electricity, and at Freeport, we are exceptionally well positioned. Our long-lived assets offer significant growth opportunities, particularly in the Americas with technological advancements, and the Grauberg mine continues its strong long-term contribution with high-grade copper and gold. We are pleased to have secured an extension of our operating rights in Indonesia beyond 2041 through a recent memorandum of understanding with the Indonesian government, ensuring continuity for this world-class operation where our team excels in large-scale block cave mining. Key financial highlights and performance review. President and CEO Kathleen Quirk. Our first quarter performance was strong, exceeding forecasts for copper, gold, and unit costs. Favorable metal prices allowed us to generate growth in revenues, EBITDA, and cash flow compared to the prior year's first quarter, even with reduced capacity at our Indonesia operations. Our diverse portfolio shone through, with U.S. mining operations contributing 2.5 times more operating income than in Q1 2025. A significant milestone was the completion of required remediation at Grauberg, allowing for a phased ramp-up in production blocks 2 and 3. We encountered material handling bottlenecks during this initial ramp-up, which we are actively addressing. This will impact our ramp-up forecast, as detailed later. In February, we reached a memorandum of understanding with the Indonesian government to extend our operating rights for the life of the resource, a crucial long-term value driver. We're also advancing future growth plans, including submitting an environmental impact statement for a major expansion in Chile and preparing for a potential green light of our Baghdad mine expansion in Arizona this year. We returned approximately $300 million to shareholders in the quarter through dividends and share repurchases, supported by our solid balance sheet, which positions us well for future growth investments. Market outlook. Slide 5. Copper's role in the global economy is increasingly critical, driven by massive power grid requirements for new technologies. Copper's superior conductivity makes it essential for electrification. Year-to-date, copper prices have averaged over $5.80 per pound, reaching an all-time high above $6 per pound in Q1. Demand signals remain robust, with U.S. customers reporting strong demand from AI data centers and energy infrastructure, offsetting weakness in construction and the auto sector. China is also showing a significant resurgence in demand. We anticipate the market will require additional copper supplies to meet growing demand, and Freeport, with its diverse portfolio, long-life reserves, and low-risk brownfield expansion opportunities, is strategically positioned for the long term. Operational review. Slide 6. United States. Production was above the prior year, but slightly below Q4 2025 and our expectations. Our teams are focused on operational discipline, reducing unplanned downtime, and maximizing output. We're encouraged by recent improvements in mining rates, particularly at Morenci, with a 19% increase year-over-year. We expect copper production to grow throughout the year. Our innovative leach initiative continues to show promise, with internal additive deployment and promising lab results for a new additive. A pilot test at Morenci is underway to increase stockpile temperatures using heated leach solutions to enhance recoveries. We aim to scale this initiative to 300 to 400 million pounds annually in 2026 to 2027, unlocking a path to 800 million pounds per year. We're also embracing AI and other technologies to enhance performance. South America. Cerro Verde navigated Q1 challenges, including flooding and mill efficiencies, well. We expect stable production at Cerro Verde and some growth at El Abra in Chile. El Abra is progressing with a leach pad extension and plans for heated stockpile injection testing. We filed an environmental impact statement for a major expansion at El Abra, which will transform it into a large-scale contributor. Grauberg, we achieved a $700 million insurance recovery, expected in Q2. One of our 2 smelters in Indonesia is operating, with the second expected to restart later this year. Grauberg restart update, slides 7 to 11. We successfully completed activities to restart production blocks 2 and 3, commencing limited mining in March. These blocks were not directly impacted by the external mud rush. However, during the suspension to implement isolation measures and infrastructure repairs, material characteristics within the cave changed, leading to a higher proportion of wet ore. Our autonomous remote loaders can handle wet material, but downstream material handling systems for loading onto automated trains are the current bottleneck. Historically, a higher proportion of dry material allowed for blending to suitable consistency for train loading. With current conditions, specialized equipment is needed to regulate or flow through chutes. We've tested this equipment, and the engineered solution involves installing these regulators. While this is a timing issue with an engineered solution, not a cost or resource recovery issue, it limits production in blocks 2 and 3 to what existing chute designs can handle. The majority of these bottlenecks are expected to be addressed by mid-2027. Our revised 5-year production forecast for Grauberg reflects an approximate 9% reduction for copper and 7% for gold, primarily impacting 2026 and 2027. This material is not lost and is expected to be recovered over time. Future growth initiatives. Slide 12 to 13. Copper demand is clearly outstripping supply. Freeport benefits from a portfolio of organic growth opportunities in jurisdictions where we have established experience. Our U.S. business is a significant value driver, with the potential for a 60% increase in copper production over the next several years through innovation, automation, and investment. We are targeting targeted cost reductions in the U.S. for 2027 and beyond, making our U.S. business more resilient and profitable. Key growth projects include scaling our leach initiative, doubling production at Baghdad, developing the Safford/Lone Star district, and the El Abra expansion in Chile. The innovative leach initiative, a high-potential, low-cost opportunity, aims to reach 800 million pounds per year by 2030. The Baghdad expansion is moving toward an investment decision. At El Abra, we are partnering with Codelco to develop a large-scale expansion, supported by the Chilean government. We are also progressing the Kucing Liar project in Indonesia. Financial outlook and key metrics. CFO Marie Robertson. Our 3-year outlook for sales volumes incorporates the adjusted Grauberg ramp-up schedule. We expect growing volumes in 2027 and 2028 as Grauberg reaches full recovery. Second-half volumes for 2026 are expected to be approximately 30% higher for copper and 50% higher for gold compared to the first half. We are experiencing renewed cost pressures, particularly with volatile diesel fuel prices since late February, with the most significant impact in Indonesia. A sharp rise in diesel prices in March equates to an approximate $500 million cost increase on an annualized basis. We are also monitoring sulfuric acid prices, though we have limited spot exposure and a natural hedge from our smelters. Our updated outlook for net unit costs is expected to average $1.95 per pound of copper for the year, up from the prior estimate of $1.75, primarily due to lower Grauberg volumes. Modeling our projected volumes and costs at various copper prices, we anticipate annual EBITDA to range from approximately $14 billion at $5 copper to $21 billion at $7 copper for 2027 to 2028. Operating cash flows are projected between $10 billion and $16 billion. We are highly leveraged to copper prices, with each 10 cents per pound change equating to approximately $400 million in annual EBITDA. Capital expenditures are expected to approximate $4.3 billion in 2026 and $4.5 billion in 2027. Discretionary projects, including Cucking Liar and the Grauberg LNG project, will account for roughly $1.60 to $1.70 billion annually. Our financial policy priorities remain a strong balance sheet, cash returns to shareholders, and investments in value-enhancing growth projects. Our balance sheet is solid, with investment-grade ratings and no significant debt maturities through 2026. Since 2021, we distributed $6 billion to shareholders. Key management statements. Richard Adkerson, Chairman. Our decision to build our company around copper was a good decision then, and has only gotten better over time. We are now in a new era of growth for copper, which is broad-based and driven by the growing demand for electricity. Simply, electricity equals copper. Kathleen Quirk, President and CEO. Our U.S. mining operations contributing 2.5x more operating income in the first quarter of this year compared with last year's first quarter, with strong conversion to the bottom line. She also emphasized that the Grauberg issue is a timing issue with an engineered solution, not a significant cost issue, and not a change in the ultimate recovery of the resource. Marie Robertson, CFO, highlighted the impact of rising diesel costs, stating, for reference, a sharp rise in diesel prices in March equates to an approximate $500 million cost increase on an annualized basis. She also noted, our current outlook for net unit costs is expected to average $1.95 per pound of copper for the year compared with the prior estimate of $1.75 per pound. Significant risk factors. Grauberg ramp-up, delays in construction schedules, vendor delivery times, and potential further changes in material moisture content. Commodity price volatility. Fluctuations in copper, gold, and molybdenum prices directly impact revenue and profitability. Cost pressures. Increasing costs for diesel, energy, and consumables, particularly in global supply chain environments. Geopolitical and regulatory risks. Changes in government policies. Political instability in operating regions, e.g., Peru, and trade tariffs. Environmental and social factors. Maintaining strong community relations and managing environmental impact, especially in large-scale mining operations. Highlights. Strong Q1. Financial performance with growth in revenues, EBITDA, and cash flow. Successful remediation and commencement of phase ramp-up at Grauberg. Memorandum of Understanding for extended operating rights in Indonesia. Progress on key growth projects in the Americas, including Chile and Arizona. Significant returns to shareholders. Advancements in innovative leach technology. Lowlights. Grauberg material handling bottlenecks impacting the production ramp-up forecast, extending the timeline to mid-2027 for full resolution. Increased unit costs due to lower Grauberg volumes and rising diesel prices. Potential for ongoing volatility in input costs impacting future profitability targets. This concludes our summary of Freeport-McMoRan's 2026 first quarter earnings call.